What is going on, everybody? Welcome back to Trading Learning 101. I have a special video for you guys today. I want to talk about Fibonacci and Fibonacci retracements. I'm sure all of you guys at some point in your life, most likely at the end of your high school career in school, you've learned about Fibonacci. It probably went in one ear and out the other. You'll also notice that a lot of traders out there, not all, but a lot of them, Fibonacci has a huge following in the trading world. They'll mention or talk about Fibonacci retracements, and there's actually a few ways you can use Fibonacci on charts. You have Fibonacci retracements, Fibonacci regressions, Fibonacci arcs, Fibonacci spirals, Fibonacci pitchforks. There's all kinds of different ways you could use Fibonacci, and Fibonacci is a sequence of numbers with the golden ratio being 61.8. So let's get into this video and let's break down what Fibonacci is and the Fibonacci retracements and how to use Fibonacci retracements. Alright, this isn't going to be a fancy video. I'm just going to put it out there, show you guys the information, because that's what I care about at the end of the day. The information. I don't care really how it looks, if it's flashy or not. As long as I got my point across, that's successful for me. Fibonacci, do I rely on Fibonacci? No, I do not rely on it, but a lot of traders out there do use Fibonacci, and you got to look at Fibonacci as another tool in your pocket to use in the markets. So first up, what is Fibonacci? Fibonacci is a sequence of numbers starting with 0 and 1. You proceed on from that, always adding together the previous two numbers, and that's the next number that you will get. So you got, for instance, 0, 1 is 1, 1 and 2 is 3, 2 and 3 is 5, 3 and 5 is 8, and so on and so on and so on and so on. It's a sequence of numbers, and you also use these numbers as measurements. The more you look into Fibonacci, the more interesting Fibonacci gets. It actually is mind-blowing because nature revolves around Fibonacci, our universe revolves around Fibonacci, and even you revolve around Fibonacci. From the measurements of your face, your body, Fibonacci is everywhere. And remember what I said about the golden ratio? The golden ratio of Fibonacci is 1.618 right here. Now remember that number as we go off and we plot out a Fibonacci retracement on a chart, and I'll show you this number, 1.618. I will leave links in the description down below, everything that I'm going over in this video, so you guys can go to it and look it up more if you want to. I would highly recommend, if you don't know anything about Fibonacci, really look into it. It will actually blow your mind on how much Fibonacci and the ratios are all around you. Just to show you guys some examples of where Fibonacci is, one of them is shells, number 2, trees, 3, flower pistils, 4, flower petals, 5, leaves, 6, storms, hurricanes, and tornadoes, and 7, you. Your face measures out to Fibonacci ratios, your fingers, the length of your arms, your legs. The human eye looks at a face. That's why when you're out in public and you see somebody, no offense to anybody that's out there, that has plastic surgery done to their face or any part of their body, the human eye will directly pick up on that because it's an error in the Fibonacci ratio. You could see here your face measures out to the Fibonacci ratio. Anyone was ever in a bad accident or had plastic surgery, again, no offense to anyone out there that has had plastic surgery or has been in an accident that disformed you. I'm just giving examples here of what I've read. people in public, that's the first thing their eye will catch, is that's not right, because the Fibonacci measurements of the face has been messed with. And that's why you'll see all these beautiful people in Hollywood, Brad Pitt, Angelina Jolie. A lot of people look up to these people, and they're really, really beautiful people because their faces match up to Fibonacci ratio and measurements to a T. From their eyes matching up to the perfect nose. Really look into it. It really is fascinating. Also, real quick, Fibonacci has a specific day for it. Fibonacci Day is on November 23rd, as it has the digits 1, 1, 2, 3, which is part of the sequence. And the golden ratio, when you take any two successive, one after the other Fibonacci numbers, their ratio is very close to the golden ratio, which is approximately that number I was telling you guys about, 1.618. The sequence of numbers that you do with Fibonacci, for example right here, A, B, and B, the 2, 3 is 5, 3, 5 is 8. If you keep going on and on and on and on and on, you'll always come up to 1618. Even if you start at 3, 5, 5, 8, 8, 13, and keep going on. Doesn't matter where you start off or what numbers you compare together in the Fibonacci sequence, you'll always come to this number right here. This is a very, very important number in the Fibonacci ratio, 1.618. And I'm sure you've all seen this image right here, just like a seashell. That's the measurement of the Fibonacci ratio. It starts right there with the 1, 1 and moves its way on as it gets bigger and bigger and bigger. Even the galaxy revolves around the Fibonacci ratio. And sunflowers. Even pyramids revolve around the Fibonacci ratio. Old Greek buildings, architecture, DNA revolves around the Fibonacci ratio. The human body, major logos that you know, like Apple, for example, honeybees. And again, the golden ratio is right here. Just what I've gone off of showing you guys so far, there are so many things in this world that we're in that revolve around this sequence of numbers. So when you have a sequence that is worldwide and everybody in the whole planet uses Fibonacci, the power of it is going to be strong, especially when you're looking at stock charts. When you have the whole world using this, Fibonacci has a huge following, and this is why the Fibonacci retracements work in the stock market with charts. I'm sure you've seen pictures in school of images of this right here with the human body spread out with measurements all around it. That's the Fibonacci sequence. All these old historical buildings, again, pyramids, Fibonacci spirals in animals like the butterfly. Even the famous painting of the Mona Lisa has measurements of the Fibonacci ratio. And I'm only scratching the surface of the Fibonacci ratio and everything that's in the Fibonacci ratio. You could really dive deep into the Fibonacci ratio. And when I was learning about all this stuff, it was blowing my mind. And I didn't learn about really the Fibonacci ratio and dig deep into it until I got involved in the stock market. Noticed that some traders were using Fibonacci on charts. So that got me curious, and I went off on the computer and I just looked up what is Fibonacci. I dove in pretty deep. Even buying books revolved around Fibonacci. I really love Fibonacci ratios. More examples right here of the Fibonacci ratio. All of this right here. From your fist to your hand, your feet, your human finger and bones, again your DNA, the uterus, the human health, the Eden Project, even the Eiffel Tower. Pretty crazy that all these things revolve around the Fibonacci ratio and the architects that use Fibonacci sequences. So now that we got all those examples out of the way, you always want to know the definition of Fibonacci, and you really want to know what Fibonacci is before you use it. That's why I want to try to give you guys a quick briefing of all the examples of what Fibonacci is in, where we really are surrounded by Fibonacci and we use it every day. So how do we use Fibonacci on charts in the stock market? Not only can you use it in the stock market, but you can also use it in Bitcoin as well. And remember, Fibonacci is worldwide. So Fibonacci is going to have a huge following using this trading tool. So you'll see Fibonacci a lot of times, not all the time, work. So here we got a price chart of Bitcoin when it ran from 5,000 all the way up to 20,000. So how you use Fibonacci retracements is you take from the major swing high to the major swing low. How I draw out my Fibonacci retracements is I always start at the bottom. I always go to the major bottom swing, plot it out, and then I'll trace it all the way up to a major high. From here, looks like 5,500 all the way up to 20,000 where it made a high. And when the stock topped out and when it starts to pull back, this is where people use Fibonacci. They try to figure out and see, okay, where is this going to bounce? You got the 61.8 level right there. And just to point something out, the 50% level is not in the Fibonacci sequence. Let me repeat that. The 50% level here is not in the Fibonacci sequence. They only add the 50% level because a lot of times, and a lot of investors, that's when they try to look for pullbacks. When a big move to the upside happens, they always try to look for it to come back at least halfway. And it just makes sense to add in the 50% level on charts. But I just wanted to point that out. If there are people who say that the 50% level is in the Fibonacci sequence, they're lying to you. You can look up the sequence yourself from all the numbers of the sequence. Never will you see a 50, but they plot it out in the Fibonacci sequence. So now that we got that out of the way, you could see when they plotted this from the swing low to the swing high up here, when it pulled back all the way to right here, it bounced at the 38.2 level for a nice little pop, and then it fell through that level, and then it bounced at the 50% level. Bounced at the 50% level up to the 38.2, and then all the way up to the 23.6 level. Then it fell all the way back down, and again bounced right at the 50% level. Nice little pop back up to the 38.2 level, and then fell down, and then it bounced right here at the 61.8 level, the golden ratio. Yes, it did poke through it right here with these wicks, but it was able to close at this 61.8 level. And it got a nice bounce all the way up to the 50% level, hung around this level for a while, and then finally blew through it. And then again, it bounced right here real fast at the 0.786 level. And then it fell through it, and then when this bounced all the way back up, where did it find resistance at? At the 61.8 level. So I just wanted to give you guys an example of the Fibonacci retracement on a chart. Let's look at another chart. Here we're going to be looking at DRIP. This is an oil ETF. The cool thing with Fibonacci retracements is you could use this on multiple time frames. You could use this on 1-minute charts, 5-minute charts, 10-minute charts, 30-minute charts, 60-minute charts, 65-minute charts, daily charts, weekly charts, monthly charts. You could use it on any time frame you want. Just always try to do your retracements from a major swing low to a major swing high. That's really all you got to remember. We'll plot this out all over again here on DRIP. I'll go to Draw, Fibonacci Retracement, Again, I like to go from the swing low all the way up to the swing high. And you see how it calculates it all right here on the left side. I do it from the swing low to the swing high because when this pulls back, these percentages make sense. When it pulls back deeper into the spike, it's pulling back 23%. It's pulling back 38%. It's pulling back 50%. It's pulling back 61.8%. Pulling back 76.4%. Or if it comes all the way back down to the level it originally spiked at, it pulled back 100%. So I hope that makes sense for you guys. And let's see how this pulled back from this swing low right here to this swing high up here. And again, Fibonacci's don't always work with every single charts. This is just another tool to help you as a trader. I like messing around with Fibonacci retracements. It's really a lot of fun. So we got this big spike right here from 1340 all the way to a high of 1560. We're measuring this move right here. We get this pullback. It falls below the 23.6 level, comes back up to the level, and then it's just sitting right at that level right there. Then fell through it, falls all the way down to the 38.2 level. Look at it, bounced right off of it, running all the way back up to the highs right there. Falls back down, hanging around this area of the 38.2 level up to the 23.6 level. Finally cracks below it right here down to the 50% level, and then bounces right just over the 38.2 level, comes back down, blows through the 50% level, and bounces right here at the golden ratio 61.8 level. Bounces right up off of it, just crosses over a little bit of that 50% retracement. But you could see with this visually how this stock moved through these stages of the Fibonacci ratios right here. And it's just fun to sometimes plot out a Fibonacci retracement and see how a stock reacts to Fibonacci retracements. And I'll give you guys a little tip. When you're looking at a stock and it's moving very, very fluently every 50 cents or $1, like if you're noticing it's liking to bounce at a mental area of, let's say, $13, and when it moves up, it's finding resistance at a level of 50 cents above at $13.50, or another whole dollar number like $14, that's a good example of plotting Fibonacci ratios on the chart. The stock is moving fluently and is liking to move at whole mental levels. So plotting out a Fibonacci ratio when it's moving every dollar, every 50 cents, or even 25 cents even. We'll take a look at another chart right here. Here we'll be looking at ticker symbol ABIO. We'll go ahead and plot out the Fibonacci retracements from the swing low all the way to the swing high. Swing low of $5.50 all the way up to the high up here of $8.90. We have our Fibonacci levels over here. So when we got this big spike up, when the stock pulls back, you could see it got a nice bounce right there. What level is this at when we go all the way over to the left here? That's the 50% level. And then it finds resistance right here at the 38.2 level. Stock comes back down and it gets another bounce right here. And what level is this? This is the 61.8 level, the golden ratio level. Spikes up, finds resistance at the previous Fibonacci level, 50%. Comes back down, did break through that Fibonacci level right here, but then was able to reclaim it and then from there rips right back up to the 50% level, pulls back, reclaims the 50% level, and rips all the way up. It did poke through this 23.6 level, but it came right back and closed right at that level. You see how it's doing that? And then when it pulled back, you could see it tried to consolidate and move higher right here at the 38.2 level, but then it crashed right down, hung around this 50% level again, and then ripped all the way back up to the 23.6 level, and then again fell all the way down, and we're at the end of the chart and it's hanging around that 50% level of the Fibonacci retracement. See why they added in the 50% level? Because people like to look for a pullback after a big spike like this around the midway halfway point of the first big spike. So that's going to be 50%. So why not just add it in to the ratio when you're looking at charts? I broke that down for you guys pretty well, I think. If you guys have any questions, leave them in the comments down below. And you see why a lot of traders use the Fibonacci ratios. I've shown you guys 2 examples, one with Bitcoin, or 3 examples, one with Bitcoin, one with oil and ETF, and one with ABIO. Now you see why traders use Fibonacci. And again, the psychology behind it, the whole world knows about Fibonacci, and the whole world knowing about something, it's going to have a following. Fibonacci most definitely has a following in the trading world. So why not use what majority of people are using to have an advantage on your side? Does Fibonacci work 100% of the time? No. No indicator out there works 100% of the time. But like I said, this is just another tool that you can learn to use and add it to your toolbox for the future. We'll go over another example here. Ticker symbol ELTK. I always try to plot it from the very bottom of what I can see on a price chart to the very top of the recent big spike. So we could see with this beginning of the spike right here, even after we've plotted out the top way up here, even before this, you could see it was topping out at this 50% level and bouncing right at this 61.8 level. Got tighter and tighter, finally surged through that 50% level right here, topped out right here at the 38.2 level, pulled back right to the 50% level right there. Bounces back up just over the 38.2 level, comes back down, bounced off it right here, then surged through it, and then you got a candle right there. That little small doji bounced right at the 61.8 level. And then from the 61.8 level, it ramped all the way up and made a new high. And then you could see it was trying to baseline right here at the 23.6 level, fell through it, bounced at the 38.2 level, back up, comes back down, was trying to hold this level, but then broke through it. And then now you could see this 50% level was acting as resistance all right there. And the 61.8 level was acting as support. So this was in a range for a short period of time. Falls below that level here with that surge. And then now this 61.8 level has been resistance for the stock. You see how the stock charts can confine to these Fibonacci levels? That's what I'm talking about. There are other traders doing the exact same thing, looking at these levels and trading off of these levels. That's why I'm going to go ahead and say a lot of times you'll see Fibonacci work really well on stock charts. Do I rely on Fibonacci? No, but I always try to plot out Fibonacci when a stock's taking off really big and having a big great day. For if it pulls back, I want to see personally how it's trading around these levels when it pulls back. The key levels, the 50% level, the 61.8 level, the 38.2 level, because other traders are doing the exact same thing. So I want to do what everybody else is doing. Same thing, just like the VWAP. A lot of traders nowadays have been plotting VWAP on their intraday charts because it's been the #1 indicator the past few years that has been working. So I'm going to do what everybody else is doing. I want to see what everybody else is seeing. And I just want to show you guys an example of Fibonacci not really working with Fibonacci. You can see right here, it's really choppy, just going in and out of the 61 point level right here, coming down, just falling in and out of this level. It did look like it was confining right here, blowing through with these candles all the way through the levels, and then acting as a little bit of resistance, coming down right here, blowing through it, acting as resistance right there, poking over it, acting as resistance, hanging out right there, blowing through it, and then now resistance. Fibonacci's not going to be perfect. That's what I wanted to show you guys with this stock chart right here. You always got to take this approach of looking at charts and applying Fibonacci retracements, support lines, resistance lines. You always got to look at this as if it's an art form. This is not a science. This is an art form. But that's going to wrap it up for this video, guys. I hope you guys enjoyed the video. If you enjoyed it, please hit that thumbs up button. Lets me know you guys are enjoying the content. Subscribe to the channel. Join the Trading Learning 101 community if you're not a subscriber already. Hopefully you guys took away something from this video and learned something new. That's my goal of every single video, to try to help someone learn something new, because I love learning something new every single day. The more you learn, the better. If you strive every day to learn something new, you gotta think, at the end of the year, that's over 350 new things you've learned in a year. So always strive to push yourself, grow, build that mind filled with knowledge. Because the more knowledge you know, the more it'll help you down the road. The more tools you have in your toolbox, the more advantage you have in the markets. And we didn't even cover Fibonacci extensions, Fibonacci time series, Fibonacci time ratios, Fibonacci time extensions, Fibonacci arcs, Fibonacci spirals, Fibonacci fans. There are so many Fibonacci trading tools that you can use. There's 1, 2, 3, 4, 5, 6, 7, 8. 8 of them on Thinkorswim right here that you could use. I only use one of them, Fibonacci retracements. You could use Fibonacci extensions if you want. Fibonacci extensions, just extend it to the right more so you could see in the future like what price levels might it bounce at. But I don't really want to try to mess with that. I want to try to rely on what happened in the past to use as a guide for the future. That's how I want to try to look at it. That's going to be it for this one, guys. Again, I hope you guys enjoyed this video. I had a lot of fun making this video. And until next time, guys, have that patience, have that discipline, and study. Alright, later everyone.